The market is continuing to hit new all-time highs, and so is my portfolio, and I hope yours is too. Today, we're going to be watching this video together about how 4 market wizards find the next stock market leaders. Now, of course, I want to help you in as much way as possible, and the easiest way to do that is by putting hashtag outlier in the chat. That way you can win big money bingo, because that's what we're going to be playing as we watch this video together. How 4 market wizards find the next stock market leaders. Let's go.
I think people make the market so complicated. It really comes down to 2 things. One, what are you doing with your life? Mm-hmm. What are you buying? Where are you eating out? Where's your restaurants? What car do you drive? What phone do you?
Okay, that was not the way I thought we'd be kicking this off, but all right. So for those of who don't know, David Ryan, he's won the U.S. Investing Championship a couple times, which I am competing in this year as well. With unbelievable gains, and he's made unbelievable amounts of fortunes in the market. And I think he still works at Investors Business Daily, which was part of William O'Neill's, who came up with the Orange Book, How to Make Money in Stocks, right? This book right here talks about the CAN-SLIM principles. Now, the thing with the CAN-SLIM principles that I want you to know, but you don't need to know, is there's all kinds of fundamentals based into the CAN-SLIM principles. But at the end of the day, they talk about M is for market. If the market isn't showing you what you want to see, because the first 100 pages of this book are all about the winning stocks. And what do they all look like? They're all going up and to the right. Every single one of them, without exception, is going up and to the right. So how about we just skip all the other parts of CAN-SLIM and focus in on the part that matters, which is price. Okay, so you do you come up with your own trading plan. But for me, I'm just saying, you don't have to focus in on all those other fundamentals. So that's, again, not exactly what David's saying here, and he might in just a moment here, but that's where he gets his style of trading from.
Use what are your friends talking about, and then just matching up those concepts with some rules. Is the stock in an uptrend? Does it have good earnings? You combine those 2 things, and then also have some sell rules, and you should be able to find some very, very good stocks. Because just think of it, you're going to be trying to find the best product at the best price, or the best service at the best price, and millions of other people are probably very similar to you, and they'll be doing the same thing. So you're going to be finding some great names. And as long as the tax structure is rewards innovation and entrepreneurship, these companies are just going to keep on coming.
Right, and you've called it the treasure hunt. That's the name of your chapter in Market Wizards. Treasure hunt.
I mean, the whole thing, it's a game. It's like, well, what's going to be the next concept, the next company that's going to do really, really well? And that's to me, that's why it's fun, it's ongoing,
and that's 100% true. Imagine if you had the 10 over 20. Price over 50, right? Because that is mathematically a trend. Mathematically, it is unequivocally, undoubtedly, undoubtedly how a trend can be measured. Now, I can tell you the direction, but I can't tell you the duration nor magnitude. So the 10 went under the 20 and price went under the 50 back here. And you can see just how quickly, actually on this exact bar right here, where that happened the opposite way, it went big and fast, right? So here's the thing. I can show you with no doubt, mathematical speaking, no YouTube disclaimer needed whatsoever, the direction of the trend. But I can't tell you the magnitude nor duration. Now, to what David's saying here is, imagine you find a great company, a company that you like, right? So for example, HEB. I love HEB. HEB, as far as I know, is not a publicly traded company. But if it were, and I love HEB, and I drink HEB Texas Pecan Roast Coffee every day with us, right? This is what we drink together. And then it's a great stock because it's moving up. It's got its this 10 over 20, price over 50 together. And it's got the buy signal, and everything's going great for it. And it's got a great story. That's a fantastic buy. People want to, and here's the real problem here. And David's not saying this, but a lot of people get this part wrong. They think a company is great. They think the product is fantastic. They love everything that the management's doing, but the price does not reflect that. Now, there will be a point in time where the price is beautiful And it's still the great same story, the great same CEO, the great same company and all that stuff. And then it works so much easier and more flawlessly together. But you can't have the company fundamentals without having the price, because the only way that you as an investor get paid is by price going up. That's it. That's the only way.
And it's just a lot of fun.
To my own experience, when I first started, I used
Hey, there's Mark. So Mark is a friend of mine, friend of the channel, I guess I could say now, because starting in May, OVTLYR and the Minervini, we're going to be partnering up on a lot of stuff. We're going to be partnering up on a lot of really cool stuff very soon. I'm very excited about this. But there's Mark right there. One of the greatest traders that's ever lived.
used to try to form a market opinion, look for the groups, and then buy the best stocks in the groups. And I constantly missed the leaders, and I never made any money for the first 6 years. I turned it all around. I flipped it backwards, and I said, you know what? I'm going to let the stocks lead me, because I keep missing them, and they're taking off. By the time I get onto the group, they're already taken off. So I'm going to go and look for just those stocks and find the best stocks. And then when I start to see a bunch of stocks in a particular group, I'll know the group's strong. And when we get...
He's talking about market breadth, by the way. Looking for a group of stocks. If that group is strong, by the way, where do you think I learned a lot of my stuff from? I've worked with 5 market wizards, one of them being Mark. And in fact, the breadth was one of the things that I learned from him. I hadn't learned breadth ever until working with Mark. So there you go.
Get a number of groups working and stocks are working, we'll know the market's strong. And suddenly I'm calling tops and bottoms like I got a crystal ball, and I'm making a bunch of money because I'm focusing on the best merchandise.
Yeah, perfect. I think it's helpful. And any kind of guidelines or tips to help people with this process if they're just starting out to try to identify those leaders and then bring that to the groups?
Well, I mean, the main tip is to, read good books. You should read my books and read O'Neill's books. You don't really have to go much further than my books and O'Neill's books. They're completely homogenous. Study those because. So
I'll give my opinion on books. Mark's going to hate me for saying this, but his books are not in my top 5. My top 5, my top 6, number 6 is Best Loser Wins. Now, I don't have that copy with me because I gave it to my mom. My mom likes to watch all of our videos. What's up, Nana? But she currently has a physical copy of that. Once I get it back, I'll put it on the shelf. But the top 5 books that I recommend in no particular order are Trading in the Zone, which is the absolute Bible of trading psychology. There is no better trading psychology book than this. There is How I Made $2 Million in the Stock Market by Nicholas Darvis. This one's really great. This version with updated commentary by one of my mentors, Steve Burns. Fantastic read. There's The Complete Turtle Trader. The story of how in the 1980s, people who came from all walks of life, just like you, became overnight millionaires. I think it even says it right here. How 23 novice investors became overnight millionaires by learning the rules of how to be successful. Does that mean that they followed it and they all became successful? Actually, no. A lot of them couldn't have that consistency and discipline, but some of them went on to make masters of the universe money, which is where we get that from. That's 3. Number 4 is trend following. Now, you'll see this is trend following, and so is this. This one's 50% larger. You don't need it. You don't need the 2012 version. If you can get the 2004 version, which was the best $10 I ever spent in my entire life, right there. The best $10 I ever spent in my entire life, right here. And then New Trader, Rich Trader. Some would say, the rumor is that I am the new trader in New Trader, Rich Trader, written by my mentor, Steve Burns. So if you were to start with one of them, I would start with New Trader, Rich Trader. So Mark's going to kill me because his books aren't on my list, but that's okay. RM Nevada says B4. You said it, and he did it incorrectly. What's B4? B4 is consistency and discipline. Fine. I'll give you consistency and discipline. But remember, this is Manny's show. Manny runs this show around here.
98% of everything that I do and I've done are in my books. And then if you want to take it to an even higher level of education, that's why we have the Master Trader program. But you got to study. You've got to learn from people that have already done what you're looking to do. And the main thing is that you commit, whether it's to me, whether it's to somebody else, whether it's to a Bill Miller value strategy, commit to one style and strategy and become an expert at it.
That I completely agree with that more than anything. What Mark said a couple of minutes ago is actually find people who have made money in the markets and learn from them. I spent years thinking I was a genius because I was following a different style of trading where they talk about high win rate trading, right? High probability trading. And I'll give you high probability setups for that just as we're talking about it. But in that regard, they would sell options hand over fist. They would sell options like it was on clearance, right? The problem with that style of trading was that as fantastic as it is to have an 84% win rate, yours truly ended up losing I could show you the broker statements, $200,000. Chris lost $200,000 with an 84% win rate. And I saw a comment one day, I was like, how did you even do that? How is that even possible? By having the risk to return be so skewed in the opposite direction. I would risk 10 to make 1, essentially. Now I will risk 1 to make 10. And I don't have to have a 84% win rate. And I make way more money. But to that point, I realized because I could not make money in the markets, I had to find people who did make money. That's how I connected with Steve and Mark and other market wizards and things like that. And yeah, to this comment earlier, how cool is that? A market wizard is about to collab with this channel. I can't wait. Yeah, it's going to be so sick. I'm so excited to have this partnership with Intervini coming up.
And because you're not going to be able to do everything, and you're going to have to also realize that there's going to be times where those strategies aren't going to work very well, and it's someone else's turn, and that's when you do other work, like your house cleaning work, and do your post analysis and things like that.
He's saying sit in cash when things aren't working. It's exactly where he's saying sit in cash. This is where the sit in cash and don't F up principle came from. I don't know if I learned it from him specifically, sit in cash and don't F up, but like it's real. How many people, in fact, do me a favor. If you have ever done this, engagement bait here, if you have ever done this where you've had cash, you're not in a trade, but you're like, I got to do something. I'm a trader. I mean, I hear all these people making money in the markets. I have to do something. Put hashtag outlier in the chat. If this has happened to you, and then you ended up being like, man, why did I even do that? That was so dumb. Put hashtag outlier in the chat. Now, Outlier will not let you do dumb things like that because we very vehemently preach sit in cash, don't F up. But I need you to put hashtag outlier in the chat. That way you can win big money bingo, right? The only way you can win is by putting hashtag outlier in the chat. There we go. Let's keep going.
And read and study more.
Perfectly. And when that rolls over, it goes dormant for 10, 20 years. But Can Slim is predicated on the new, like Bill says, what the golden list is the new high list. So it's always going to keep you in tune.
Oh, new high list. He's talking about this. He's talking about stocks pushing newer highs. That's exactly what he's talking about right here.
And
Which? Tell me in the chat. What do I say about all-time highs or 52-week highs? Is it scary? Because there was a point in time where when I saw a stock hit new all-time highs, I'm like, it has to go down. I'm going to sell calls against it. Is it scary for the stocks to hit all-time highs? Or is it bullish AF? Yeah, it's bullish AF. It's so bullish, right? Because imagine, nobody is up there waiting to get back to break even. There's literally no one up there. Anybody who's ever bought the stock since Jesus last walked the earth and is still holding it is making money. It's bullish AF. Exactly.
you throw in fundamental analysis with all those metrics and then trend following.
Okay, again, you don't have to have all the fundamentals. If you can just do the part where you're trend following, you can make so much money. But if you want the story to go with it to help you feel better for more conviction in the trade, I'm not going to stop you of that. Actually, I think it's a great idea. By all means, go for it.
So, you know, your leader is not going to have RS of 12 and be below the 50, the 200. It's just not.
Okay, let's break this down. RS of 12 means relative strength. Now, you can measure relative strength. In fact, that was something I used to calculate. The relative strength is calculated by, in fact, here's a really simple way to do it. Just go onto your charts. And if you like the relative strength, the RSI indicator, just compare it. I don't think I have it up here. Let me add it real quick. Indicators, RSI. Here's a super pro tip. To see RSI versus the relative strength of a different stock. Okay, we're all going to drop off for a moment here. So RSI, and I don't know why I've got a moving average on there, but RSI is this purple line. Let's make this bigger. Can I make this like real big? There we go. Okay. RSI of the market right now is showing to be at 72.18. Okay. Now let's add the RSI of something like NVIDIA. So I'm going to do this and then do this. So this is the market on the left-hand side. This is NVIDIA on the right-hand side. You're going to really like this pro tip, by the way. Hold on. Where's RSI? Okay, RSI right here. Where is it at? There it is. Okay. So again, I don't know why there's a purple moving average on there, but watch this. The RSI of the market is at 71.61. The RSI of NVIDIA is at 67.68 right now. 67. That means the market has greater strength than NVIDIA. Oh, that's real. So you can do that on any stock you want, right? Let's put on Tesla. That just got a buy signal today. Let's go look at Tesla. Tesla's RSI shows 60. The market's RSI shows 72. That means the market has greater strength than Tesla. So that is not a high value of relative strength. If a high value of relative strength is one that shows a greater value than the market. Does that make sense? Pretty cool, right? You're welcome. I used to compare that all the time, right? And in simple terms, that's all you got to do. RSI, compare the RSI value of the market to RSI value of that stock. If it's Lunar, right, that shows 68 versus 72. If it's Google, that shows 69 versus 72. I don't think I'm going to find any one that's stronger than the market. And what does that mean? That probably means if you go back to what Chris has said the last couple days, the market needs to cool off a little bit because the market ran hard and fast and it kind of left all the individual stocks behind. Isn't that cool? Look at what you learned today. Not a single one of these is outperforming the, in fact, let's go to SoFi. Somebody said SoFi in the chat. What's SoFi? Right? Not a single one of these is showing higher relative strength than the market. Now, how is relative strength measured? It's actually super simple. What's the average gain divided by average loss? That's it. What's the average gain over X number of periods versus the average loss over X number of periods? So you can compare apples to apples and you can say, okay, what's my RSI? This. Oh, somebody said MU. Let's go to MU. Yeah, not even MU. Right. Now, granted, at one point in time, it probably was higher, but as of right now, it's not. I mean, and look at the difference. You can see it with your eyes. What's the difference in this versus this? One of these is going up at a vertical angle. One of these is going up, but not with the same degree. Pretty neat, right? I do feel like if you're watching the replay, that is worth a like and a hype. I feel like that's worth a like and a hype if that was useful. Pretty cool, right? All right. Let's get back to it. Let's get back to this. So when he says relative strength, you have no excuse. You can now see what that relative strength means. And you don't need the proprietary IBD relative strength. You can literally see it with your own eyeballs.
So we need to get those MAs in a bullish alignment with the indexes. And your new leader is going to be
CAR. Let's look at CAR. They've had a short squeeze. That's a great example. Let's go look at CAR. Thank y'all for that. Okay. Yeah, boy. Here we go. Now we're talking. Let's look at both of these bigly. More biglier. Maximize pain. Not pain. Panel. Yeah, boy. Hang on. Why does that one look different? Oh, it looks so different because it blew out. Look at it. Blew out the RSI. That, boom, right there. There's the perfect example of what does relative strength look like that it outperforms the market. Now go look at the price. Yeah. Okay. Now you see it. Pretty cool, huh?
Basketball that's just going to spring up because it's been held underwater for 9 months. And also, I've really been fortunate with some IPOs that came public at the end of bears. When you can get an institution to pony up at the end or in the middle of a bear, it's going to be just like pristine. It's going to have everything. So we haven't seen many. There's been a couple of really small deals, but nothing that I've seen yet. But we'll probably see some of that. I don't know. New high list, buddy. Yep. Make it simple.
And
pretty cool, huh? Are y'all learning something? Do me a favor. If you are learning something, put hashtag outlier in the chat because you're going to be entered for bingo. Not even half of y'all have put hashtag outlier. What are you waiting for?
In terms of the new high list, are you referring to all-time highs or just 52-week highs? I'd love to hear that
Either way.
distinction.
52-week new highs, and I'm a hypocrite. A lot of things I say, I then refine and twist them a little bit. In a bear market like this, the damage is so enormous. I'm looking for great action, maybe 20-30% off the highs.
Mm-hmm.
But when you look at LI, the auto EV manufacturer in China, it's at all-time new highs. It's right there. So that has a very unique signature telling you that it's rare merchandise. Okay, I mean, why would you buy anything that has massive overhead when a stock in the...
All right, pay attention. Why would you buy anything that has massive overhead? Meaning, why would you buy anything that's like not on a beautiful trend up? Why would you buy anything that's not got let me rephrase that. Why would you buy anything like SoFi that's going to have a ton of overhead resistance, right? All these SoFi bros all the way down are trying to get out of break even. All of them all the way down. Now, granted, does that mean it's going to never go back up? Of course not. Of course not. But that is the psychology behind these order blocks right here. You need to know what these order blocks represent and why they represent it. Jim Ropel's speaking exactly what they are.
In the same group is within 2% of the all-time high. It doesn't make any sense. You're fooling around with the second best player. And I did a study and I proved that the difference between the number one stock in a group and number two is 50%. If the leader goes up 300, the number two stock goes up 150.
Oh,
right. So I want that. Now, the problem is this. If you miss the leader, now you're aware of the sector. Mm-hmm. And the number two stock's going to set up and you're going to go for it because number one.
You can see the excitement in his face and his eyes and his mannerisms. And you can tell people who love the game of trading because they have that excitement. And I hope that I can convey that as well. But you can see it in his eyes. I love it.
One's extended. And I do have a stock right now that is like number two because exactly that situation exactly happened. But I think if Bill was here, he'd say, you're going to have to find a way in, whether you're going to take the added risk and you're going to load up at a 2 weeks tight or pull back to the 50. When you identify the monster, Bill always had them. I would talk to him and invariably he would be in the very best 2 or 3 names of the whole market. Well, nobody gets all those names at the perfect place. They sneak up on you, you miss them. I mean, even Bill missed them. No question about it. But
he's talking about Bill O'Neill. Remember the orange book that I held up earlier? He's the author of the orange book and the founder of Investors Business Daily.
He ended up working his way in. Mm-hmm. But when you miss the first true bear market cup and handle and it takes off, that's your ultimate lowest risk point. Every secondary buy points are higher risk. They're much better for ads than start a whole new position.
And coming back to, separating that distinction between the leader and, the silver medal in the group, I'd love to hear you talk about the distinction and how you determine what is the leader and what are overall groups that are leading as well. I think that'd be...
Hey, Roar says, no way. I'm family friends with Jim Ropel. What a small world. Hey, next time you talk to Jim and his family, let him know that we'd love to have him over here hanging out with us at Outlier.
That'd be awesome.
I mean, Bill would say it's the stock you're up the most on. It's the stock that has the 99 RS, the 2.0 up to down volume. They stand out like sore thumbs. It's not hard to find them. It's hard to commit to them because they're going to be extended. It's hard to be patient. Most people will find it and they'll be like, oh, it's a lock. It's going to go up 200%. They'll buy it extended. They're going to get whipped out in 20 minutes or worse. They won't cut their loss, which is the biggest rookie mistake.
Oh. There's definitely one. Finally, we got like one that he really, really set on board. He also said something about waiting. So we're going to give trade what you see right there.
Of all time. It's not hard to find them. Any jackass can screen. It's how do you handle what you find?
This is what you're going to look for off the general market low. When you're in a correction, you want to look for stocks that corrected the least amount off the highs. The closer to a new high, the better. But generally, I like them to be within 25% of a new high.
Meaning that they're already trending up, right? Sorry, I'm pouring myself a refill of coffee over here. So I would recommend you guys take a screenshot of this if you need it, right? If you need it, take a great screenshot of this because this could be super useful for you.
When I'm looking to buy them, they may correct more than that, but when I'm going to look to buy them, I don't want to be buying stocks that are down 40, 50%. And that's where I'm buying them from because there's too much overhead supply. Number two, stocks that are base building. They're consolidating within a long-term uptrend like Chipotle. Chipotle had that consolidation, moving sideways.
Which more than likely it probably had overhead resistance, right? It probably had order blocks in the way. And because of that, it was not as strong as it could have been. I want to drop a couple of these off. This is in my way. No, I don't want that. How do I make it smaller? Hold on. Oh, delete. I don't want RSI anymore. I don't know why I just deleted. Delete pane. Okay, cool. Let's go with that.
Maybe it tried to break out of a shorter base. As long as it stays consolidating and it meets the criteria, stick with it. The ones that surged the most and the fastest off the lows and got to new highs the quickest, those are usually, may not be.
I would also point out, Stumpy saying he's in Chipotle. I would point out that I have no idea when these interviews were recorded, and I would say that this is not up-to-date information. So don't look at these as buy recommendations at all.
Viable right away because they get extended, but then you'll look for a lot of up days versus down days. What David Ryan invented called ants, where you have 12 out of 15 days or greater up versus down. You'll look for that type of action, and then from there a subsequent entry point, and then also IPOs, recent IPOs. I mean, right now I'm short Dix. I was buying Dix off of its first IPO.
I couldn't help myself. Okay, sorry.
Base before it went up 500%. And now that's long gone, and now it's rolled over, and it's a short. So, but look for those IPOs because the best time to buy IPOs is when the market's in a correction, and that's the earliest point that you're going to get a stock. So I call those magnitude plays because you're getting it as early as you can in its life cycle. And then going back to your point on incremental exposure, progressive exposure, then as you start to see trades working and these trades showing you profits.
So incremental exposure means add to winners. That's exactly what he's saying right there.
Then you incrementally start adding exposure as long as the stock should be in those criteria.
Yeah, perfect. And going to point number 4, both the Cisco example and Peloton, they were both recent IPOs that went through their primary base and were exploding higher coming out of correction. So 100%, those are great examples.
All right. So the fun.
Hang on. There was a question. I want to use the chart that they just pulled up for 1 second when it pops up here. 1 second.
Coming out of correction. So 100%.
There. Okay. So there was a great question here. Great question from Mert. Mert, how's it going, man? Thanks for the question. What is overhead supply that Mark's talking about? Overhead supply is this. Imagine that you, Mert, bought this stock at 30.25. All right. You probably were not very happy. Probably. Oh, where's this? There we go. You were probably not very happy, Mert, when it went from 30.25 all the way down to 19.75, right? Now, Mert, imagine how you would feel the very first time you got back to break even. You would probably be so stoked, wouldn't you? Right? You would be that overhead supply, meaning you would offload your shares. You would supply those shares back to the market at break even. This is the concept, exactly for sure, of what an overhead order block is like. Now, this is a perfect example. You can't tell me order blocks don't work because the first time it came up into here, it was rejected. And the second time it came up into here, it did have enough buyers to overwhelm sellers like Mert would have been, and then it pushed up to new highs. This is the same concept. This is exactly the same concept as what we use. Overhead supplies are order blocks. There you go. Exactly. Skinny Buff Guy, Bravo graduate, says, is Mark saying because the stock is down so much, there are a lot of people sitting on a loss? That's exactly what he's saying. Let's finish out. Sitting on a loss and likely to provide resistance to the upside because they're all dumping it as they recover. Dude, that's exactly it. Exactly it. So that's why new all-time highs is bullish AF. Because if you can clear this resistance right here, if you can clear the amount of sellers that want to get out of break even, there's nobody up ahead to sell onto you. Nobody up ahead. Pretty cool, huh?
Percent. Those are great examples.
All right. So the fundamentals. So everybody talks about how to make money in stock.
All right, listen. I know nothing about fundamentals, so we're all going to learn this together. If that sounds fun to you, put hashtag outlier in the chat. That way you're entered for bingo. If that sounds fun to you.
stocks and the can slim strategy and all this stuff. I am not a can slim trader. Like I do not follow.
And they interviewed him on Trader Lion. Oh my gosh.
The can slim method is what I do is
He laughed at that. I laughed at it too. That may not be the quote technical definition of an order block, but that's the psychology as to why order blocks work. And that, my friend, is what I care about.
fully study this book. This book is a study of the biggest winners in history, and I mean it gives us the fundamental blueprint. So like everything from how to make money in stocks that I pay attention to are really like the fundamental characteristics. I mean, William O'Neill did the work for us. He like laid it out for us. And I mean, the basic bare minimum things that he kind of put out there are 25% minimum quarterly earnings and sales growth, 17% ROE. I personally, just over the years, having learned from some guys, I like 40% earnings and sales.
While he's talking about fundamentals, and I've absolutely stopped paying attention, there was a question. So Alexis, great question here. So when buying a stock, you want to have an RSI bigger or smaller? Hope it's not a dumb question. So I would like to say, I don't look at RSI. I totally don't look at RSI. RSI is relative strength index. It's relative strength to itself. And then what you can do is you can compare one to the next, and you can say, okay, if the relative strength of Tesla is at 56 and the relative strength of the market is at 68, the market actually has higher relative strength than Tesla. Because remember, relative strength is the measurement of average gains divided by average losses over X number of periods. But then you can compare side by side, and you can say, if I'm looking at two different stocks and I need a way to sort, you could look at relative strength as one of those ways to sort. And you could say, if Tesla's relative strength RSI is 68, NVIDIA's relative strength is a 69, maybe going with NVIDIA is the better choice. But then again, I don't trade that in my plan. I'm just using that as an example. I hope that's useful to you. Let's keep going.
And really, the higher the better. I mean, like Dan Zanger, that's his whole thing, is like the higher the better, like triple digit earnings and sales, even better. And then also we want to see accelerating growth versus just like growth. So, if a company has one really good quarter, let's say they grow their earnings at like 30 or 300% and their revenue at like 150%, but then the next quarter it's like 40, and the next quarter it's like.
As he's explaining all this, and listen, Oliver Kells made a ton of money in the market. In fact, he wrote a book that I printed. I don't know where it is at the moment. He wrote a book that I printed out on paper because it's not like an actual book. It was like an ebook. I hate ebooks. I like physical copies. I have no idea. It used to be right here. I don't know where it is right now. Hang on. In that, he talked about his, I think it was 941% gain in the U.S. Investing Championship, and let's not discount 941% gain. But then again, these metrics he's talking about helped support his conviction in the stock. Were they needed? No, because the stock was going to go 941%, and it may or may not have had this with it. And that's what I want you to keep in mind. Can this give you conviction and support to go with buying that stock? For sure. And I'm not going to tell you not to do that. But in my opinion, it is not necessary.
35-25. It's not to say that 35-25 isn't like good growth, but it's like the Meta or whatever that's growing at like, right now, Meta's had a big uptick in its earnings the last couple of quarters, but let's just say like a company that's growing at 35 consistently every quarter, and they're doing like huge revenue and a big earnings number. That's like a mature growth company. That to me is a better number than some company that like had huge growth and then it decelerated rapidly and the numbers aren't that big. Whereas that smaller company, or not necessarily smaller, but that company that does like 300% earnings and like, maybe like 200% revenue, but then the next quarter they do like 400% earnings growth. And then the next quarter they do like 500%. I mean, that is like the cream of the crop when we can have a huge triple digit number that is accelerating quarter to quarter.
And just understand, this all may be true and the stock's going down in value. 100% of this may be true. Everything he said may be true, and it still goes down in value. Okay. So again, care about the fundamentals. I just don't. How do you feel? Put them in the chat. I actually am very curious to see. And I'm going to skip forward because I just don't care about these anymore. But I do want to hear from you in the chat how you feel about fundamentals.
Quarter, all year earnings, PEs. We want to find those companies with huge earnings and sales.
Yeah.
So what would happen, William? I came up with back.
Hey, you selfless deny any. Did you exit your entries from Friday or still holding? Well, that's a great question. You know, the best way to find out if I am or am not holding onto a stock is by joining us in the Outlier Trading Room invitation only live streams. How do you get an invitation? You just join Outlier for 82 cents a day. And then you'll get the invitation to join us in the live trading that I am using in the US Investing Championship. Full transparency, 100% verified, everything that we're doing.
Back when I was running the mutual fund for William O'Neill and Company, the New USA Growth Fund, because what would happen is that we would stick to stopping our buy at 10% out of the base, and I would see that the buying would just continue on afterwards, and those turned out to be some of the biggest stocks where we would finish their buying. There were still other institutions that were out there buying it, so I asked the question: what's the difference between a stock that's going to make just a 20% move and be done with it, or a stock that's going to have a multi-year move or a multi-month move and have huge performance? And I found that it was usually the buying at the beginning of the move. And you can actually see it's occurred a few different times. I mean, here it occurred over in here, and then you can see it occurring over here. And so it just
And to go back to the fundamentals part, fundamentals are astrology to men. Prove me wrong. I have no idea what the fundamentals are. You tell me, where on the chart did the fundamentals touch you? Where on the chart did the fundamentals touch you? I don't know. I have no idea. I couldn't tell you at all. But I can tell you where price was going. Because remember, the trend always works. I can't show you duration. I can't show you magnitude, but I can show you direction. And that direction is up and to the right. Okay. Jack says, I'm working on my plan to not be the story only type of trading. And Jack, I think that's really important, right? Because there can be some great stories. I'm not going to tell you to not look at that, but when the story and the price confirm each other, then you can see explosive growth right there. So here's what we're going to do. I'm going to give you guys some more. Like we're going on a campfire at the Boy Scouts, right? I'm going to give you momentum. And I'm also going to give you follow your plan, which is going to bring us to our very first bingo.
That's right. Bingo on what is this? Aisle I? I was trying to do something funny, like this was like a blue light special on Kmart, and I totally botched it, and now I'm explaining how much I botched it. So here we go. Bingo, baby.
Yeah, that was great, wasn't it? Remember that time when I tried to be funny and then I totally botched it? That was awesome.
What it tells you is that there are institutions out there that they do a tremendous amount of research, that they found that, hey, this is a company that could have a great growth for a while, and they have 3 million shares to buy, and they can't get it done. Especially, let's say, I mean, today the stock trades 600,000. So even if they're buying 3 or 4 million shares, it's going to take them a number of days, if not weeks, to complete. If you have more than one institution doing the same thing, then this can go on for weeks. And that's what I found. This is just showing you huge institutional money getting aboard a stock and taking a long-term position in it.
And that's what creates the trends that we can ride as retail investors.
Yeah. And the characteristics are, this is what I kind of boiled it down to, is you want a stock that is up 12 out of 15 days. You want a stock that has about a 25% move during those 15 days. And you also want the volume up 25% during those 15 days. That's just the mark.
Hold on. This was actually quite good. Y'all listen to this. Let's go back 30 seconds.
This is what I kind of boiled it down to, is you want a stock that is up 12 out of 15 days.
First, you're looking for a stock that's up 12 out of 15 days. So it's already strong and it's already over moving averages. Okay, so up 12 out of 15 days.
You want a stock that has about a 25% move during those 15
and in those days, at least a 25% move.
Days, and you also want the volume up 25% during those 15 days.
And he also wants to see the volume up 25%. Okay. Now, granted, the first two, stock 12 out of 15 days, 25%, I can get totally on board with. Volume, I don't look at. I just don't. Because there's going to be people, and I saw it last week, saying, oh, it's a low volume rally. This is never going to stick. Bro, I don't care what the volume is. If it's going crazy, that volume's turned up to 11 for me because I'm getting paid. That's the volume I'm looking for. Oh, look at my background. Not what I meant to do. I meant to do that.
That's just the mark of a number of
All right. As we know, Manny runs this show, and all of that equals G4. All that equals G4. Oh, yeah, sure. I'll give you that, Manny. I'll give you that. Remember, this is the Manny show.
Institutions taking a big position in a company. The one other thing you have to be careful of, though, is if the stock has been moving for a long time and you get those exact same characteristics, like it might have actually happened here.
Yeah.
Is that it's actually sometimes it was just a great indicator because we found it was showing up at the beginning of the move and it was showing up at the end of the move when the stock was getting very extended. And so it was the first time I'd ever seen an indicator that could work both ways.
Right.
And the climactic move is when everybody recognizes it and everybody can't take it anymore and they've all got to buy it. And that's usually the climactic move and the stock's over. In this case, it was over for about 3 or 4 months. But in other cases, that's the end of the move for years.
Wait. Chris from Wisconsin said I missed a bingo. Did I? Almost. We're close.
So it actually works. It's worked very, very well.
Yeah. So like, look, I do, I run quote unquote, scans. Like I scan for volume every night. I look for huge volume. And that's kind of part of my process. It really takes me like 3 to 5 minutes each day. And for all the names I uncover doing that, if I can catch maybe 1 or 2 names a year out of the hundreds that I might write down, that's sort of how it plays out. For example,
SMCI.
This year, SMCI, I found SMCI like $68. I took 1 trade in it then on a bull snort, it ran, and then I kind of just didn't think anything of it. And then I was looking, and throughout all of 2022, it kept going up. And then I kind of really caught a big trade in it, earlier this year. Or I guess in, must have been like April to July of 2023. And then this year. But really a lot of the other names that I scanned for in there and wrote down, I didn't trade. I tend, kind of like I said, I tend to make, most of my money in like 3 to 5 stocks. So this year that's been like NVIDIA, SMCI, Kava, AMD, more at the beginning of the year. What else is in there?
All right, we're about done. But here's the thing. We only have 1 bingo. Man, if only Manny were here to save us. Manny, what bingo spots did I miss, Manny? Let me know, Manny. I don't even know what I missed. Let winners run. I didn't hear anybody say that. Jeez. Certainly didn't hear breakout or market cycle or mindset. And the orange man certainly wasn't one there. Jeez. MJ Carney says B5. I missed that one. Rick says N4. Cheadle says O5. Come on, Manny. Say it, Manny. O5 mindset. Leo says O5. Man, I tell you what, I just didn't hear any of those. So I guess we're just gonna have one. What a disappointing bingo today. No, we can't do that to you guys. Because that would be a breakout from how we play big money bingo. And of course, we're looking for stocks with big breakouts, right? We want to see that big move to the upside. This is exactly what we're looking for, kind of thing, right? Let's see. I wonder what else. What else could we add onto here? You know what? It only works. It works best if we have everything set up with a market cycle. Oh no! How did that happen?
We somehow have 3 bingos, baby. Let's go.
There we go. All right. Hey, do y'all play Sequence? The table game Sequence? Man, I love that game so much. My wife and I, and then my best friend Justin and his wife Christy, they were over this weekend and we were playing Sequence. And the boys beat the girls 4 games to 2, and we were just like losing our shit, like having the best time ever. So yeah, I know what it feels like to have these things pop off like this. It's so much fun. Yeah. Who says that? Keisha loves Sequence. Yeah, Sequence is super duper fun. And here's the deal. Bingo is also super duper fun, but it's only super duper fun if you put hashtag outlier in the chat, because here's the thing. A third of y'all didn't. So that means a third of y'all have zero chance of winning. A third of y'all have absolutely no possible way to win. Now, granted, if the system didn't pick you up, that's not my fault, but it was your fault for not doing it again, because Nomad 747777 with the 4 and the, I can't keep track. There's so many numbers on here. Mr. Nomad, that's our first winner of the day. Let's see. Taking a screenshot, sending this over to April. And for all of our winners, be sure you send an email over to support@outlier.com to claim your prize. Cheryl and April will send that over to you. Oh, goodness. Let's see what the Nomads won. Let's see what the Nomads won today. Hopefully something that Carlos is wearing. Let's see. Outlier all over print polo shirt, light blue. Oh, I have that. Let's see what he's wearing. Let's see what he's won. Outlier all over polo shirt, light blue. He literally, I have this exact shirt. We're going to match. I can't wait, Nomad. Be sure you get the next size up because it does run small. And look at that. Like I said, worn by our favorite model, Carlos. Look at that. Big money bingo, baby. Let's go to the next one. Boom. Let's see who the next winner is. By the way, that was a $35 shirt that we're sending over to him. Sean. Congratulations, Sean. I love when I can see faces. It makes it so much better for me. Congratulations to Sean. Let's see what Sean's won. All right, Sean has won. Get that. Let's see what Sean's won. Sean has won a 10/20/50 shirt big. Dude, I like these. This is one of my favorite merch shirts, by the way. How it's got like a NASCAR look to it. Oh, that was weird. Hang on. My copy and paste didn't work like I thought it would. Let me copy and then paste in the email. There we go. Sending this over to Cheryl and April. All right, let's go see that real quick. I love the 10/20/50 NASCAR design. 10/20/50 shirt big. So he's got a $32 shirt heading his way. Now, when you get this one, if you get the Under Armour shirt, it does run a little small. Consider ordering one size up. But Sean, you may be a big dude. I don't know for sure. If you go for the big and tall shirts, they should fit a lot better. I'm just saying. The Under Armour shirts run a little small. Let's see. Hey, there's Sean right there. Woo woo. All right, let's see. 80 Delta Koozie. Who won the 80 Delta? I didn't even draw the next winner. Who won the 80 Delta Koozie? Let's see who won the 80 Delta Koozie. Is Viet 1098. Very cool. Congratulations, Viet 1098. I am super stoked for you and your 80 Delta Koozie. And your 80 Delta, where is that at? 80 Delta Koozie. Let's go check out the 80 Delta Koozie over here. There we go. So everything in our merch shop, again, is priced at the lowest possible price the vendor allows. So if anything sounds cool to you and you want to pick that up, be sure you go to the merch shop, use code OVTLYR, OVTLYR at checkout, and you'll be able to pick this up for a very low price. It'll save you 10%. So it'll be cost plus 8%. So like this koozie right here, you can get for like $3 and change, right? Super, super cool. So y'all go check that out. And listen, I hope this was useful. If it was, the best way to help me out is by hitting the like and hype button. It honestly does make a difference in the YouTube algorithm. That's only available on the replays for the first 7 days. So hit that like and hype button and subscribe. We're so close to 50,000 subscribers, and we're going to show you everything you need to save time, make money, and start winning with less risk by clicking one of these 2 videos. And we'll be talking soon.